Welcome to the Deep Dive. Today, we're digging into the global unconventional gas market.
That's right.
You wanted us to really get to grips with this. We've got a pretty detailed report here from Cognitive Market Research.
The 2025 Global Edition, yeah. It gives projections out to 2033.
Exactly. Plus, we have a couple of, relevant news items. Sinopec's find in China.
The tight gas discovery.
And that big ExxonMobil Pioneer merger. So, our goal, like always, is to pull out the key stuff for you, the learner.
Give you that clear picture of where things stand and where they might be heading without drowning you in data.
Right. Just the core insights.
And the sources are good for that. The report gives the numbers, the structure.
And the news gives us real-world examples. Put some flesh on the bones.
Exactly. It shows how these trends are actually playing out.
Okay, so let's start with the big numbers for you. The overall market size and that growth forecast.
Go for it.
The report puts the global market at, let's see, USD 182,451.6 million. That's for 2025.
Okay, quite substantial already.
But here's the kicker. They expect it to nearly double by 2033. The forecast is USD 360,546.24 million.
Wow, okay. Double.
Yeah, that's a compound annual growth rate, a CAGR of 9.00% over those 8 years, 2025 to 2033.
A 9% CAGR. That's pretty aggressive growth year on year.
It really is. Think about what that means. Practically huge investment, right? Infrastructure.
Absolutely. New projects, new jobs, new tech, maybe it signals major activity.
And the report's timeline gives context. They use 2024 as the base.
Right, with historical data from 2021, so it's building on recent trends.
And projecting out a fairway to 2033. So it's not just a short-term blip they're seeing.
No, it suggests a sustained expansion over the medium term.
Okay, so where is this growth happening? Let's break it down regionally for you. North America.
Still the leader, by a fair margin, actually.
The report says over 40% of the global market share. That's USD 67,507.09 million in 2025.
And growing at a decent clip, too, right? What was the CAGR?
7.5% for North America overall.
Okay, solid.
And within that, the U.S. is, well, it's the giant. USD 53,263.0 million for 2025, growing at 7.3%, driven by exports, it seems.
That makes sense. The U.S. shale boom really set them up for that. They've got the infrastructure, the expertise.
Right. Then you have Canada, USD 8,100.85 million, but growing a bit faster at 8.3%. Maybe cheaper gas prices.
Could be, or maybe catching up on certain developments. And Mexico.
Mexico's at USD 6,143.15 million with an 8.0% CAGR. So yeah, North America is the established base.
Definitely. That head start with shale gas, fracking, horizontal drilling. It's all there.
Okay, let's hop across the pond. Europe. What's the picture there for you?
Still a very significant slice of the pie. Over 30% global share.
Yeah, the number is USD 52,910.96 million for 2025. And the growth.
Expected CAGR of 8.0%, so growing a bit faster than North America overall.
Interesting. Key players are the UK, Germany, Russia. The UK is pegged at 8.8% growth. The report links that maybe to the push for lower carbon emissions.
Plausible. Natural gas as a transition fuel away from coal, perhaps?
In Germany, 8.2% growth, driven by energy security concerns. That feels very relevant now.
Extremely relevant. Security of supply is, well, it's paramount for many European nations right now.
So Europe's big, growing steadily.
Yeah.
But maybe different dynamics than North America. More hurdles.
I think that's fair to say. You hear more about regulatory pushback, environmental concerns perhaps being more front and center in policy debates there historically.
Right. Less of a boom, maybe.
Yeah, potentially more constrained, although that energy security angle could shift things. It's complex.
Okay, now for the region with the really eye-popping growth rate. Asia Pacific.
APAC.
Yes. This is where the numbers get really interesting.
Currently around 23%. Global share, market size, USD 43,788.38 million in 2025. But that CAGR.
It's the highest.
By far, 11.8%.
11.8%. Okay, that's rapid expansion.
China's a huge part of it.
Yeah.
USD 18,391.12 million market size, 11.3% growth. Infrastructure demand driving that.
Makes sense. Industrialization, urbanization, massive energy needs. But look at India. Smaller market currently, USD 4,378.84 million.
Yeah.
But the highest regional CGR at 13.7%.
13.7, wow. What's behind that? Technical developments.
That's what the report suggests. Maybe they're catching up fast, adopting technology.
Or innovating. Yeah, that kind of growth often means a sector hitting its stride, maybe from a lower base, but with huge potential.
This APAC growth, it feels like it could really shift the global energy balance you're tracking.
Absolutely. It signals where a lot of the future demand growth is concentrated and where investment in unconventional resources is clearly ramping up.
Okay, quickly touching on other regions for you. South America,
Smaller share, but still relevant.
over 5% global share, about USD 6.9 billion in 2025, growing at 9.7%. So faster than North America or Europe.
Interesting. Who are the main players there?
Brazil leads, 10.3% growth, linked to rising energy demand. Argentina's next, 10.6% growth, more about energy security investment.
Okay, solid growth figures.
Then the Middle East,
Yeah.
around 2% share, about USD 7.3 billion, but growing fast at 10.3%.
Which is notable given their huge conventional reserves. Diversification, perhaps?
Seems likely. Saudi Arabia and UAE are mentioned, both with over 10% COGRs.
Right. They're starting to look more seriously at their unconventional potential.
And finally, Africa. Smallest share, around 1%, USD 4 billion market, but still growing at 9.3%. South Africa highlighted with 10.2% growth.
So potential there too, but maybe facing more infrastructure or investment hurdles to really scale up.
It's plausible. Okay, that's the regional picture. Now, what kind of unconventional gas are we talking about?
Good question. The report breaks it down.
Shale gas is expected to stay dominant, right?
Yeah.
That's the gas trapped in shale rock, used for power, heating.
Yeah, the one that really kicked off the revolution, especially in the US, it's a mix of hydrocarbons from organic matter.
But the report flags tight gas as the fastest growing segment,
Ah, yes, this is important.
found in less permeable rock like sandstone or limestone. Needs fracking to get it out.
Exactly. The rock itself doesn't let the gas flow easily, so you need technology to create pathways.
And its growth is tied to conventional gas running low and just overall energy demand rising.
Right. As the easy stuff gets harder to find, the industry gets better at tackling the tough stuff, like tight gas. Technology unlocks it.
The report also mentions coal bed methane, CBM, as another type.
Yep, gas absorbed onto coal seams, another part of the unconventional mix.
So shale's the biggest volume now, but tight gas is the one really picking up speed.
That's a key takeaway. Shows where the technological push and maybe future exploration focus might be heading.
Okay, so where does all this gas go? The applications. This impacts the industries you follow.
Crucial link, yeah.
Industrial sector is the biggest user currently. Feedstock for manufacturing, fertilizers, chemicals, that sort of thing.
Tied to industrial output globally and often supported by cleaner energy pushes.
Makes sense. But power generation is tagged as having rapid growth.
Absolutely. The coal to gas switching trend is huge here.
Because gas generally has lower CO2 emissions than coal when burned, right?
Correct. So it's seen as a way to reduce carbon intensity in the power sector, aligning with decarbonization goals. A bridge fuel, essentially.
A bridge fuel, yeah. Hear that term a lot. Are there other uses mentioned?
The report likely mentions residential, commercial, and transportation too, but industrial and power generation are often the biggest slices.
So the demand side seems strong, especially with that power generation shift.
Definitely. It plays a key role not just in meeting energy demand, but in how the energy system is changing.
Okay, let's summarize the drivers for you. What's pushing this market forward?
We've touched on some already.
Increasing demand for power, obviously. Depletion of conventional fossil fuels, the easier to get stuff.
Yeah, fundamental supply-demand factors,
And a growing focus on energy security.
which we see playing out geopolitically.
And the need for cleaner energy sources, where gas is often positioned relative to coal.
Exactly. Those seem to be the core engines, according to the report.
Pretty fundamental drivers, really.
They are. Hard to argue against those basic needs propelling the market.
But of course, it's not all smooth sailing. There are restraints, potential brakes on growth.
Always important to consider the counterforces.
Regulatory uncertainty is one. Rules can change, making investment tricky.
Yeah, absolutely. Permitting environmental rules, they can vary wildly and change quickly.
And volatile natural gas prices. That's inherent in commodity markets, right?
Very much so. Price swings can make or break project economics.
And then the big one, environmental challenges, water usage and fracking.
Huge amounts of water are often required, which is a major issue in water-stressed areas.
And methane emissions during extraction and transport. Methane's a potent greenhouse gas.
Yeah, fugitive emissions are a serious concern and a focus for mitigation efforts. These environmental aspects are constantly debated.
So a balance needs to be struck there.
Definitely. Between energy needs, economics, and environmental responsibility. That's the tightrope.
Okay, what about market trends for you to watch?
What's shaping the way things are done?
The report points to a continued increase in shale gas operations makes sense, given its dominance.
Still the backbone in many regions.
But also, crucially, technological advancements in extraction.
This feels key. Continuous improvement.
Yeah, getting better at drilling, fracking, maybe reducing that environmental footprint.
That's the goal. Making it more efficient, cheaper, and hopefully cleaner. Innovation is constant.
Right. Now, the competitive landscape, who's playing in this field?
It's a busy space.
Highly competitive, the report says. Global majors, regional players,
You've got the super majors involved?
ExxonMobil, Chevron, Shell, BP, Total Energies, the usual suspects.
And many other large independents and national oil companies, too.
Which brings us nicely to those news items. First, Sinopec in China.
Right. The tight gas discovery you mentioned earlier.
Yeah, 30.55 billion cubic meters. That sounds like a lot in the Sichuan Basin.
It's significant, especially because it's tight sandstone gas.
And deep,
Yeah.
between 4,500 and 5,200 meters down.
Exactly. That highlights the technical challenge. Drilling that deep for tight gas isn't simple.
So it shows Sinopec is really pushing the envelope technologically to boost their domestic supply.
It demonstrates that commitment, yeah. Developing new geological models, better drilling techniques. It's serious investment.
And it underlines that point about tight gas being a key growth area, even the challenging stuff.
Precisely. They wouldn't be investing like this if they didn't see significant potential there.
Okay, the other big news? ExxonMobil, merging with Pioneer Natural Resources.
A huge deal in the industry. October 2023.
All-stock transaction. The goal seems clear. Massively expand ExxonMobil's footprint in the Permian Basin.
Which is prime territory for unconventional oil and, importantly here, tight gas. Pioneer was a major player there.
So ExxonMobil is basically doubling down on U.S. unconventional resources.
Absolutely. Strengthening their position, aiming for efficiency gains by combining operations.
And they also mentioned accelerating their net zero emissions targets as part of the rationale.
Interesting angle. Combining assets allows for more integrated planning, potentially streamlining emissions reduction efforts across a larger portfolio. Whether that translates, we'll see.
But for you, the learner, this kind of massive consolidation signals what? Long-term belief in these resources.
I think it has to. You don't make multi-billion-dollar deals like that without a strong conviction about the future value and longevity of those assets, even while grappling with the energy transition.
It's a strategic bet on efficiency, scale, and the continued role of unconventional gas and oil.
Exactly. A major realignment showing commitment to these resources for the foreseeable future.
Okay, let's try and pull this all together for you. Key takeaways from this deep dive.
Let's recap.
We're seeing significant global growth projected for unconventional gas. Market potentially doubling by 2033.
Driven by that strong 9% CAGR.
Regionally, APAC is the speedster, leading the growth charge, even though North America holds the biggest share right now.
Yeah, watch APAC, especially China and India.
In terms of gas types, shale is still king by volume.
But keep a very close eye on tight gas. That's where the fastest growth is forecast. Driven by demand for power, cleaner alternatives to coal, energy security.
But balanced against regulatory hurdles and those significant environmental concerns.
Water use, methane, those aren't going away.
What stood out as maybe surprising? The sheer scale, perhaps. Hundreds of billions of dollars.
The scale is certainly impressive. And maybe the pace of growth in APAC, particularly India's 13.7% CAGR, that's really something.
And the news items help make it real Sinopec, drilling super deep for tight gas. Exxon making a huge bet on the Permian. It's not just abstract numbers.
No, it shows the actual activity, the investment, the challenges being tackled on the ground.
So for you, the learner, why does this matter? Well, understanding these trends is valuable if you follow energy markets.
Or investment opportunities.
Or just want to be informed about a really significant slice of the global energy pie.
And the regional differences really paint a picture of diverse energy landscapes across the world. Different needs, different resources, different policies.
Okay, let's end with a thought to chew on. A provocative question for you.
Lay it on us.
We've talked a lot about the growth and the drivers. We've also talked about the environmental challenges.
The central tension.
So, considering those challenges, how do you think technology and policy will need to evolve together? How can they, or must they, balance this surging demand for energy with genuine sustainability goals in this booming market?
That's the multi-trillion-dollar question, isn't it? Balancing act is key. Can innovation reduce the footprint fast enough? Will policy drive the right changes or hinder progress?
Something to keep thinking about as this market continues to expand.
Definitely. A crucial question for the future of energy.